The Osha Index has recorded a week-to-date return of 0.67%. Analysts at Afrinvest attribute the sideways trading to weaker half-year earnings. Ayodeji Ebo, head of research at Afrinvest, joins me for an update on the Nigerian equities markets. Thank you so much, Ayo. It's a pleasure to have you. Well, we're seeing the market just records very soft gains so far this week. Yesterday, it was up very marginally by 0.04%. Let's talk about the banks. We continue to focus on this sector because it's usually the most liquid and the most active for investors. These days, there isn't exactly a safe haven anymore for investors in the market. But let's talk about some of the things you say, according to your report, that banks could be doing. Let's talk about deposit mobilization in Q4. You say that we might see politicians liquidating their deposits for the elections.
Yeah, when we looked at, based on the H1 2014 result, we found that most of the banks found it challenging growing their deposits. They were able to grow their deposits an average of 3.7%, which is significantly low. And this may become more challenging when we go into Q4, and we expect that politicians that have had deposits with most of these banks may need to terminate and liquidate their deposit to fund their political ambitions. So the banks need to still see how they can be able to devise innovative ways in which they can attract deposits to their banks.
But so, sorry to butt in. Looking at some of the previous statements, particularly from the last quarter, individually, many of them did well in terms of deposit mobilization. So if they are able to keep that trend up and we see this liquidation of deposits, do you think that that could actually create a good balance for them, or they might still have a challenge if these politicians liquidate their deposits?
Yeah, you know, based on when we looked at it, based on industry, there are some that did very well. There are some that that recorded negative growth. But when you look at it, it's just like they are playing from the same basket. For those that are able to come up with good products that can attract deposits, get it from those that are not paying them as much interest as they would have loved to earn. So not that the overall, when you look at it based on industry, not that the overall deposit growth is that impressive, less than 4%. So if politicians now start to liquidate and fund political ambition, so the overall industry growth may decline at the end of the year. So that is why for them to fund, that is why we've seen some form of capital raising to finance other oil and gas and the PHC power assets through Eurobonds.
Okay, what about them retaining earnings, perhaps as another way of boosting their bottom line? Yeah,
with the CBN proposal for banks to adopt the Basel III, most of them, instead of Basel focuses more on tier 1 banks, on tier 1 capital rather. So they may decide to increase their retained earnings, which is statutory 30%, to over 30%, which means that for investors they should expect less of dividend, because they may prefer that it's cheaper to retain and fund any viable project or any viable loan rather than go and raise tier 1 capital. So we expect that at the end of the year we may not be able to state by how much, but we expect that some of the banks, those are some of the scenarios that are available for them to be able to show up their share, tier 1 capital, such that they are able to meet up with the demand of Basel III.
Okay, let's talk about stocks that you like at the moment that you think investors should put their money on.
Yeah, the banking stocks will continue to present opportunities, because when we look at the FPI, because of its liquidity, like you said earlier, contributes over 50% to the activities in the market. So for investors to just watch out, most of the stocks are fundamentally strong based on their pricing, but because of trends, we will continue to see trend trading sideways, and that is why we, based on our analysis, 6 years analysis that we did on a quarter-on-quarter basis, looking at how the stock market has been performing. Q3, we continue, based on our analysis, we discovered that it has always been very weak, but they should expect that Q4 will be strong, because we're able to establish a strong relationship between the company's scorecards and market performance. So we expect that the Q4, people should be able to take opportunities of good pricing, and they should be able to take advantage of upside potential. So when you look at First Bank, is still a very good peak. GT will continue to be one of investors' stocks that investors will continue to
so
take.
Basically, it's going to be still an interest.
Yeah, it will generate interest.
Banks.
But
okay, what about industrials? We've seen industrials not do too badly too.
Yeah, the industrial is another promising sector that investors should look at. CCNN, based on its price to earnings multiple, which is one of the cheapest within that particular space,
okay.
it should also present opportunities for investors.